Good afternoon, guys. You can see time is around 5. Let's look into today's Nifty 50 as well as Bank Nifty trade analysis. First, let's look into Bank Nifty, guys. As you can see clearly, the overall market sentiment is bullish. The market is making higher highs, and you can see the market broke this high as well, and the next day also breaking this high as well, and even breaking that high with no retracement at all, clearly indicating market sentiment being very bullish, guys. But in a smaller time frame, let's look into the trade and see how you could have taken. You can see the market initially opened flat, rejected price from lower levels, and clearly moved higher. And you can see after this, the market rejected price from these higher levels and continued further selling towards the downside. So if you try to plot the anchor way up level here, you can see the price broke the anchor way up level towards the downside, rejecting price from these levels, clearly indicating some sort of bearishness, guys. But what you can see here is that the market didn't break structure towards the downside. You can see the first candle here. The market failed to make a lower low or break of structure. And you can consider this momentum towards the downside, guys, where the market didn't show any fair value gap or imbalance. And you can see there is no imbalance over here. Only imbalance where you could have seen is this candle over here, where the market mitigated this imbalance and tried to ensure some kind of bearish momentum towards the downside, but failed to make a lower low here as well. In case if you can consider this swing momentum nowadays, so if you consider the high of this candle to the low of this candle, you can see price rejecting from 0.38 level over here, and this 0.38 level is in confluence with the fair value gap over here. You can see there is a fair value gap as well here. The market mitigated this fair value gap, rejected price from these levels, and what you could have expected is that the market would continue further selling towards the downside. So what you could have done is seeing at this rejection candle and after this kind of huge bullish momentum and after this kind of huge bearish candle, you could have easily taken short position here, keeping your stop loss just above that candle itself, guys, and above this candle itself, and you could have targeted towards the downside in case if the market would have broken this neckline or even this order block level. But here you can see there is no order block formation also, guys. The market didn't break this structure towards the downside with fair value gaps or imbalance. And you can see again the market rejected price from these levels and broke structure of this candle high as well. Clearly, in case if you might have taken short position here, you could have exited your position as soon as the order here, the candle broke towards the upside. With a small stop loss, you could have exited this can. What I'm saying is that after this kind of huge bearish momentum, the market rejected price from these levels and would have continued further selling towards the downside. This is how the market could have behaved, guys. After seeing this kind of huge bearish candle, you could have expected another bearish candle forming towards the downside here and breaking this structure low as well. But here the market didn't even break this low as well, clearly indicating some kind of strong support at this zone. And instead of breaking towards the downside, the market broke structure towards the upside. And here the market formed a chalk over here, clearly indicating some sort of bullishness, guys. And you can see after this kind of chalk formation, the market consolidating above this zone itself. And if you try to plot the low of this candle to the high of this candle, you can see the market is trading above the 0.5, above the 0.38 level over here, clearly indicating some sort of bullishness. And this is the 0.38 level. And market even broke this neckline high as well. You can see the retracement high. And after this kind of break of candle, you could have entered long position here itself, guys. One long position was here where you could have entered and you could have exited once if this trade has been broken, or this is after this huge bullish candle you could have entered keeping your stop loss just below that candle and targeting towards the upside, or after this kind of huge bullish candle is where you could have targeted, and for target levels you could have plotted this retracement level, the low to high to low of this candle, so you could have targeted all the way to 1.68 level, or you can see the market here you could have targeted all the way, or as here the market actually broke the 21 moving average towards the downside. This is where you could have exited your position, guys. This was one trade setup where you could have taken, or you could have even traded after this kind of long bullish candle and the neckline being broken. This is where you could have taken, keeping your stop loss just below that candle and targeting all the way towards the upside. You can see this kind of piercing pattern after this kind of bullish momentum is where you could have exited. But you can consider this whole swing as one momentum, right? So what you can see here in a 5-minute time frame, where the market actually broke this structure as well with a very good momentum towards the upside. So this is a clear break of structure. And if you consider the low of this candle to the high of this candle, you can see the market rejecting price from 0.38 level over here. This is the 0.38 level where price is rejecting. And what you can see here is that the market taking support from the day VWAP level, as well as the 200, the 21 moving average, as well as the 9 moving average. And you can see this kind of huge bullish engulfing candle guys here, which changed the whole sentiment from being bearish to bullish. This is a good, very bullish sign, guys, because what you can see here is that the market here broke the 21 moving average and the 9 moving average, took support from the VWAP level and closed above the 21 moving average, clearly signifying bullishness, guys. So what you could have done in a 5-minute time frame was to take a long position here of this candle, keeping your stop loss just below that candle itself, you can see, and just one candle of stop loss, guys. And one candle of stop loss is what I always try to teach you. Here you can see this one candle of stop loss, and here, this is also one candle of stop loss where we took SL over here. You can see this was a short position which we have taken and keeping our stop loss just below that candle itself. This is the SL where we have taken, guys, a small SL. So we could have exited when the market broke this candle towards the upside. And you can see after that, the market even not just rejected price from that levels, but even broke the 921 moving average as well as the day gap towards the upside, clearly indicating bullishness, guys. So you could have easily exited your position in case if you might have shorted here. So this is one SL what we are taking based upon price action. And you can see one candle of stop loss is what we have entered here. And you can see how we could have profited after this kind of momentum. And in a 5-minute time frame, guys, you can see this kind of consolidation where market took support from day VWAP level, broke upside, and you can see this kind of consolidation, which I would like to mark. Market is trading above the 9 as well as the 21 moving average, clearly indicating some sort of bullishness, guys. Whenever the market consolidates above the 9 as well as the 21 moving average in a 1-minute time frame, and market breaking this structure over here, so what you can see here is that in case if the consider the market sentiment to be bearish now, guys, you can see this momentum over here where actually markets broke structure towards the downside. This is 0.38 level is a 5-minute time frame. You can see clearly the market here broke structure towards the downside. And after this kind of huge bearish momentum, guys, what you could have done is that you could have waited for retracement. So market would come mitigate these levels and continue further selling towards the downside. So in case if you try to plot the fib levels over here, the high of this candle to the common point between this to the common point between this. So you could have marked the 0.5 levels over here and keeping your stop loss just above that candle itself. And you could, in case if the market breaking this neckline over towards the downside, you, you could have taken short position, but definitely you can see there is a strong support over here. And the market, instead of breaking towards the downside, the market again retraced. And even here, in a 1-minute time frame, the market broke the 21 moving average as well as the 9 moving average towards the upside. So in a shorter time frame, you could have easily entered long position here, keeping your stop loss just below the candle itself and trade it towards the upside. Yes, you can see in a 1-minute time frame rather than in a 5-minute time frame. And if you consider this swing momentum and see in case of how the market is taking support, if you try to plot the anchor VWAP level, you can see the market here broke towards the upside and price rejecting, and again the market is trying to move towards the upside, and you can see clearly the market even broke this high as well, clearly indicating some sort of bullishness on you guys. So I hope you're understanding what I'm saying. So, and if you consider this break of structure and if you consider retracement where the market retraced to the 21 moving average over here, and immediately after this the market failed to make a lower low, instead the market broke structure towards the upside in a 5-minute time frame. And in case if you try to plot the fib extinction levels, guys, the common point between this to the common point between this to the common point between this, what you could have targeted is the 100% move over here. You can see this was in a 5-minute time frame, the 1.68 level, and you could have targeted it all the way to 2.6 level. You can see, guys, this you could have trialed it all the way to 2.68 level, and in a 5-minute time frame you could have just traded. You can see how bullish the market is. The market is trading in a 5-minute time frame above the 9 moving average itself, guys, not even the 21 moving average, clearly indicating some sort of bullishness. And you could have just holded on to your position and you could have made a decent profit in this trade, guys. So let's look into a 1-minute time frame and see. Even in a 1-minute time frame also, you can see how the market here is trading above the 9 as well as the 21 moving average, as well as you can see rejection of price from 21 moving average, and still market is continuing very bullish. So you could have targeted it all the way to 2.6 level over here. This is the target levels, guys. You could have made a very good decent profit in this position. And you can see how the market kind of behaved here, guys. And you can see the market here trying to break the 21 moving average towards the downside in a 1-minute time frame, but immediately followed by another bullish candle. And again, the market here closed, but you can see rejection of price from these levels, clearly indicating the market sentiment is bullish. Or you could have traded, continued in a 5-minute time frame and see how the market here in a 5-minute time frame is behaving. And you can see this kind of consolidation where market is consolidating above the 9 moving average in a in a 5-minute time frame, clearly indicating some sort of bullishness. So you could have expected the market to go further towards the upside. And this is the trade analysis in Bank Nifty, guys. I hope you're understanding what I'm saying. But definitely, the same setup didn't happen in Nifty 50, which is very important for today, guys. What we need to see here is that you can see what happened in Nifty 50 was you can see the market showed some kind of gap down, clearly indicating bearishness, guys. You can see the clear gap down in market, and market sentiment is clearly bearish. And you can see if you mark the mid of the first candle as well as the 5 minute zone here, what you can see here is that the market rejecting price from this 200 moving average, guys, clearly indicating bearishness. As soon as you can see, whenever market is trading below the 5 minute zone or the mid of the first candle and price rejecting from 200 moving average, you could have easily entered short position here, keeping your stop loss just above that candle itself, guys. In case if the market breaks the 200 moving average towards the upside, is when you could have exited a position and you could have targeted towards the downside. And for target levels, what you could have done is to mark the retracement levels of the first candle. And what you could have targeted is the 1.68 level over here. This is the 1.68 level where you could have targeted your positions. You can see the 1.68 level where you could have targeted your position. So you could have trialed it all the way to this level. And what you can see is that if you consider this swing momentum, which actually broke this structure low, clearly indicating market sentiment is bearish, guys. You can see clear break of structure. And if you try to draw the fib levels here, the common point between this, the high of this candle to the low of this candle, or what you can consider if you consider this whole swing as one momentum, guys. So if you consider the common point between this to the common point between this, you could have drawn the 0.38 level over here. The price would have rejected from these levels and continue further towards the downside. Or the 550 levels is where you could have drawn, guys. This is the 550 levels where you could have expected price to reject from these levels and continue further selling towards the downside. And you can see the momentum towards here, guys, where market is kind of trading towards the 550 levels. And if you can see the market here rejecting price from 550 levels, and there was fair value gap here as well. You can see there was some sort of fair value gap where the market didn't mitigate these levels over here. So what you could have done is to enter short position here in case if you might have considered the market rejecting from these levels, keeping your stop loss just above this candle itself and targeting towards the downside. This is how you could have traded, guys, in case if the market sentiment would have been bearish. But what happened here is that you can see following candle here, after this kind of rejection candle at the 550 levels, you could have waited for the retracement, guys, or the 550 levels or the neckline breakdown. Or if you consider the high, the common point, or the 550 levels, you can see this is the 0.5 level, or you could have waited for the retracement, mid of the retracement levels to be broken towards the downside to consider the market sentiment being bearish. But before that, what you can see here is that the market showed some kind of pattern formation over here, clearly indicating some sort of bullishness. And if you consider this 550 levels and this fair value gap here, guys, what you can see here is that there was some pattern formation. And if you try to plot the anchor wave up level towards the downside, you can see the market rejecting from this anchor wave up level and clearly trying to move towards the upside, clearly indicating some sort of bullishness only, guys. And you can see the market here kind of consolidating and trying to break this high, clearly indicating market sentiment being bullish. What would market behave in case the market sentiment would have been bearish, no, guys? What you can see here is that you can see the market here made a low and market broke towards the upside, but faced rejection here and clearly market broke structure towards the downside, clearly indicating a break of structure here. And what you could have considered is that the market after this could have continued further selling, guys, in case if the market sentiment would have been bearish. And if you try to plot the high to low of this candle over here, the high of this candle to low of this candle, you could have marked the 550 levels over here, and you could have kept your stop loss just above this candle itself, keeping your stop loss just above this candle and targeting towards the downside, guys. And targeting all the way towards the downside is how you could have entered short position. But immediately you can see the market broke structure towards the upside, and you can see this kind of consolidation, clearly indicating market sentiment is bullish. And even though the market continued further, but here it rejected and closed within this zone. And this is where you could have entered long position, guys, in case if you might be well worst experienced in the market. Because here, after this break of structure, you can see market even broke towards the upside above this 550 levels over here, above this 550 levels, and rejected price from this 550 levels of this bearish candle over here. So if you consider this bearish candle over here, you can see this is the 0.1.68 level in confluence with this bearish candle, the 550 levels, and you can see rejection of price from these levels. And price is trying to head towards the upside. And the market clearly broke the structure high as well with this kind of candle. Or in case if you could have expected the price rejecting from 0.38 level, uh, failed, but you could have expected the market rejecting from 350 levels, because here there was some kind of imbalance as well as the fair value gap here. You can see the market was not traded here. So what you could have expected is that the market break, keeping your target levels, your stop loss above this candle itself. And you can see here, you could have expected price rejecting from these levels and continuation of price towards the downside. Let's try to plot the daily gap level and see how the market here behave. Definitely, guys, in case if the market sentiment would have been bearish, the market would have rejected from 350 levels and continue further selling towards the downside, where you could have expected the market after this kind of bearish candle, you could have expected another bearish candle over here, and market would have continued further selling towards the downside like this, guys. But this momentum towards the upside changed the whole perspective of market being bearish to bullish. And what you could have done here is to enter long position here, keeping your stop loss just below that candle itself. And you can see the 200, the day wave up level here, where price is taking support. Along with that confluence, guys, what you can see is this is price rejecting from these levels over here, which I have already explained to you. And if you try to plot the anchor way up level, the price rejection and the pattern formation, after that, after this kind of huge bearish candle, the market failed to make a lower low, made a lower low, but failed to sustain and closed within this range and closed above that candle itself, clearly indicating market sentiment being bullish. And you can see after this, the market broke structure towards the upside as well. And you can see the market went all the way till here, guys. And you can see there was some kind of imbalance. So the market came here, mitigated this fair value gap, or in a 5-minute time frame. Let's try to see how the market here in a 5-minute time frame behaved. Definitely, you can see the market rejecting price from 21 moving average from here, clearly indicating bearishness, guys. And what you can see here is that you can see this kind of huge bearish momentum with this kind of bearish candle over here breaking the 9 as well as the 21 moving average. With compared to this, guys, you can see this bullish momentum which is strong enough, and even the market broke this high as well, clearly indicating market sentiment to be very bullish. And what you need to see here is that the PD array, guys, you can see this was the PD array where market failed to mitigate this PD array, and this is the PD array, guys. So you can see there is a fair value gap here where market failed to mitigate, and there is a fair value gap towards the upside. There was aggressive selling followed by aggressive buying, and again the market retracing, mitigating this fair value gap, and again the market is trying to head higher. And here, after this kind of momentum, again the market broke this structure high, clearly indicating a bullish momentum. And let's look into a smaller time frame and see how the market here kind of behave. I hope you're understanding this. You can see this fair value gap over here. And here the market came and mitigated this fair value gap. But here the market in a 1-minute time frame is not showing any fair value gap mitigation. But in a 5-minute time frame, which I have already mentioned to you, if you see there is a imbalance over here, guys. You can see imbalance over here, and you can see this kind of huge bullish candle over here. There is imbalance over here as well, where the market didn't trade all these levels. Uh, so the market came, mitigated this PD array, and even broke structure towards the upside, clearly indicating the market sentiment being bullish. And after this break of structure, what you can see here is that the market here is clearly broke this structure as well, indicating a chalk formation over here. And even the 200 moving average, with this swing momentum, guys, the market broke the day VWAP level, the 9 moving average, the 21 moving average, as well as the 21 200 moving average towards the upside, clearly indicating market sentiment being very bullish. So you can easily enter long position, keeping your stop loss just below this candle itself and targeting all the way to swing high as well. But again, you can see the market came all the way to this day VWAP level, mitigated these levels, and further continuation of price towards the upside. So if you try to plot the fib levels, the common point between this to the common point between this, you could have marked the 50 levels. But what you can see here is that the market taking support from day VWAP level, as well as market broke this 200 moving average towards the downside, but immediately the market reversed here. So what you could have done is to mark the anchor VWAP levels here. In case if the market is sustaining above these anchor VWAP levels, you will try to take long position. You can see here is where the market broke anchor VWAP levels towards the upside. Since if you consider this swing momentum, guys, where the market broke structure towards, you can see the market here made a chalk over here, clearly indicating some sort of bearishness, and the market made an higher high. So what you could have thought is that the market sweeping this liquidity and continuing further selling towards the downside. So if you consider this structure over here, the high common point in this to the common point in this, what you could have drawn is to mark the 550 levels over here. So this is a 550 level where you could have marked here. So you could have expected the price to retrace all the way to these levels and continuation of price towards the downside in case if the market momentum, market sentiment would have been bullish. This is how you could have considered, guys. So for this momentum to happen, what you could have waited is after the price rejecting from these levels, in case if the market sentiment would have been, you could have plotted the low to high of this candle in case market rejecting, and you could have waited for the mid of this retracement to be broken towards the downside or the neckline over here. As long as you can see this neckline breaking towards the downside or the mid of the candle breaking towards the downside, you couldn't have considered to take short position, guys. Uh, so but what you can see here is the market taking support from this VWAP level and even breaking the structure towards the upside. As you can see clearly, after an immediate chop formation, the market even broke this level, or you can consider this chop formation also. And what you could have done is to, after this kind of consolidation, you can see clearly the market breaking this the 50 levels as well as closing above these levels and consolidating in a sideways. So what you could have done is to take long position here, keeping your stop loss just below that candle itself. Let's look into a 5 minute time frame and see how the market here behaved. And what you can see here is that you can see the market came all the way to day VWAP level, and you can see this kind of huge bearish momentum where the market sentiment is clearly bearish. But what you need to see is that one is the rejection of price from the anchor VWAP level, the day VWAP level here, and you can see following candle being very bullish, engulfing pattern. This is a very good bullish sign, guys, where the market here broke the 21 moving average as well as the 9 moving average towards the upside, breaking the 50 levels of this impulsive momentum towards the downside, as well as closing above its zones, guys, clearly indicating market sentiment being very bullish, guys. So in a 5 minute time frame, what you could have done is to enter long position here, keeping your stop loss just below that candle. And for target levels, what you could have done is that you can see the market clearly broke structure here and retraced to these levels. So this was the initial break of structure. So for so what you could have done is to mark the swing high to swing low to swing high over here. And what you could have targeted is, you can see the 3.6 level over here, which is in confluence over here, guys. Or what you could have traded here is that you can see how the market is trading below above the 9 as well as the 21 moving average. You could have just holded on to your position, guys, and kept throughout the day. With one candle of stop loss is what I'm explaining to you. Or in a 1 minute time frame, you can see here is where the market actually showed some kind of bearish momentum. So what you could have considered is to mark the order block levels here. You can see this is the order block level where the market broke structure towards the upside here with kind of imbalance or fair value gap. So what you could have done is to, in case if the market breaking these order block levels, you could have exited your position, or you see how the market after this kind of huge bearish candle following another bullish piercing pattern, and after that another bearish candle following by another bullish piercing pattern, clearly indicating some sort of demand only, guys. Even though the market breaking the 21 moving average and closing, following candle itself is showing some kind of bullishness itself, clearly indicating the market sentiment is bullish, and you could have just raided it all the way to this level. And only after this candle is where the market shows some bearish momentum. So you could have exited at here. You could have trialed your profit to all the way to these levels, guys. So I hope you're understanding what I'm saying. We should always look into a 5 minute time frame, guys, for better confluence. See, in a 5 minute time frame, you can see the market is showing a very good price action where the market taking rejecting price from the anchor wave level over here. This is the day VWAP level as well as breaking the 9 as well as 21 moving average towards the upside, clearly indicating market sentiment being very bullish. So what you could have done is just to trade based upon risk to reward ratio, guys. And throughout my process of learning, guys, you should always focus on not making money. You should always focus on protecting your capital, guys. And when you learn to master to accept losses and protect your capital, only then you can be a profitable trader, guys. Because making money is not a part of trading, guys. Making money is a byproduct of following your rules in a very sophisticated manner. So in case if you might have taken short position here, guys, you can see if you might have not exited your position as soon as the market here broke structure towards the upside, in case if you might have expected rejection of price from these levels and continuation of towards the downside. So what you could have seen is that the market breaking this 9 moving average towards the downside, or the zero point 0.5 levels of the swing momentum towards the downside for better confirmation. Only then you could have exited, or else if you could have placed your stop loss just above that candle, guys. In case if you might have not exited your position after seeing this kind of huge bullish candle, you can see you could have made a very huge losses, guys. You can see this kind of momentum towards the upside, which might have either wiped out your capital because this was on expiry day also. And after that, even though the market retraced here, you can see again the market mitigated its levels and continued further bullish momentum. So it's always not better, guys, to follow a strict risk to reward ratio. And in case if you are wrong at that particular point of time, better exit your trade itself at that moment. Don't try to hold on and don't be in a hope that, okay, the market would recover. I strongly recommend this kind of trading mindset for you to not inculcate, guys. Don't always try to hope that the market would do something in favor. And market is just to target both buyers and sellers, guys. So some days you might be lucky, but definitely not all days, guys. One day you will be wiped out from market, and it's so I'm asking you to better maintain a good risk to reward ratio, and only then you can be a profitable trader. And what you can see here is that the market here failed to make a lower low here as well. You can see the market rejected price from 21 moving average, failed to make a low low. Instead, the market broke structure towards the upside, clearly indicating another bullish sentiment along with PD area. So I hope you're understanding, guys. So what I need to tell you is you should have a very good risk to reward ratio. In case if you have a one candle risk to reward ratio, only then you can take, or either in a 5 minute time frame or in a 1 minute time frame, guys. It's better that if you have a risk to reward ratio in a 1 minute, 5 minute time frame, it would work out better because you can see how the market here would rallied up all the way towards the upside. So I hope you're understanding what I'm saying. Please follow your risk to reward ratio and trade properly, guys. Only then you can be a profitable trader in a long game, in a long run. Um, I think a lot of people might have entered the trading arena to make a quick bucks, but definitely this is not a place to earn quick bucks, guys. This is a profession where smart minds need to work, guys. Only when with experience as well as following a proper risk to reward ratios and rules and regulations, only then you can be a profitable trader then, or else for not for non-disciplined people, you should be very disciplined here. I think you should have a lot of experience, and screen presence is very important, guys. And trial, I think, as making as many mistakes as possible, and mm, trading based upon risk to reward ratio, guys. It's better that you always trade based on risk to reward ratio. And whenever you are being hit by a stop loss, then go analyze what made this trade to hit and try to build upon your losses, guys. Like the losing trades, and only then you can become profitable trader one day. And just analyze both the right trades where you have taken based upon risk to reward ratio and the wrong trades, and only then you make efforts on your side. Only then you can become a profitable trader one day. I hope my knowledge here is helping, guys. Please like, share, and comment. Share with your friends and family also. And Instagram is the way to go. You can message me directly. I would be glad to reply to you guys. And that's it, guys. Thank you.